Holy moly, donut shop. We got the breakdown. We got the breakdown. Is Uncle Charles bearish? Why? Yes, I am. Why am I bearish? We got the breakdown. Holy moly. It was an incredible intraday. It was an incredible day. First and foremost, everybody, please check on the bull bias traders. Bull bias traders, are you guys okay? You guys all right? Anyways, yesterday we spoke about, we talked about a lot of things yesterday, and there were a lot of different voices. But one of the things we talked about was the gap, right? We had this gap from the July 16 candle. Some people thought it was already filled because of the low, the wick. Some people judge it by the wick. And I mentioned I judge it by the body. And the body was around 563. So we was to fill the gap. In my opinion, it was 563. That was the level. And boy, oh boy, did it not disappoint. Okay, look at this intraday move. This level right here, okay? I'll change it to green. That green level, that green line, that was the 563 level, which represented the gap that I had, the gap that needed to get filled. You guys can see we hit that level, we tested, we never broke above. We opened above 562. I wrote this in my Discord, guys. This was at 10:01 a.m. Based on Uncle's standards, 563 hit, which means the gap is officially filled. To trigger puts, this is the important part. This is the why, this is the what. To trigger puts, 562 needs to fail to put 560.5 and 558.5 in play. Of course, I continue to cover it, the price action throughout the day, one setup, one level at a time. But the point was to trigger puts, 562 needs to fail. Because why? Based on my standards, 563 hit, that means the gap is officially filled. Now, remember what I talked about. When do we trust a rejection from resistance? We trust rejections from resistance when the rejection is strong enough to break down the support, which is why I wrote to trigger puts, 562 needs to fail. How do we know that a level has failed? Uncle Charles uses the 15-minute chart. Some of my Discord members, they use 5-minute charts. Some even use the 1-minute chart. I use the 15-minute chart for confirmation, okay? For confirmation is the key word. I don't use the 50, I wait till it closes, then I enter. No. That means it's confirmed that the breakdown happened. But I usually eyeball it, a lot of practice, years of putting it in. I saw the momentum, the hard rejection, enter puts. I alerted it to the group. 562 failed. All right, hit the next target, broke down the next target, broke down the next level. Look at that. Boom. That was the 11 o'clock candle. Okay, you guys see the close. This might have been an easier entry for beginners, but you guys see the close on the 15-minute chart below 560.5. Level to level. Broke that down, hit the next target. I had a zone, 558.5 to 559. We broke that down, broke it down, hit the next level right there, 557. Now, we had a big move from 563 down to 557, so the market needed to cool down a bit, and it bounced, recapturing 558.5 to 559 zone. But what happened? It bounced to 560, couldn't break that level. But what happened? We had a dead cat bounce setup. What's a dead cat bounce setup? When we recapture a level, but it wasn't strong enough to clear or hit the next level. In this case, it came up short and broke back below support, the 558.5. Went, hit the lower targets, hit at 555, and so on. That level was very important. So I wasn't too surprised to see that there was somewhat of a battle there. Why was there somewhat of a battle there? Because it was based on the blue trend line. And I mentioned to all y'all that I would rock with the bears if we break down that trend line. I'd rock with the bears if the price action told me to. This is an example of the price action telling us, hey, time to go and enter puts. Time to go buy puts. Time to go short. Time to roll with the bears, because that's the thing about the sheeps. We roll with the bears. We roll with the bulls. But the most important thing is we roll with the price action. And that's exactly what happened. Simplicity. Okay? That's why I was bearish today. Not because of some crystal ball or some divergence, but because of what the price action setups gave me. The price action setup. Okay? So from here now, what's the next plan? Well, the next plan is that I am going to stay bearish as long as the breakdown of this trend line holds. That means the price must stay below the trend line, which is sloping up. It's around 561. Okay? I am going to stay bearish as long as below 561. Especially with Jackson Hole tomorrow and Uncle Powell speaking. You know he moves the market 10 a.m. Eastern time. Okay? Get ready for some fireworks. The last two Jackson Holes were Michael Jackson and... wait, that's the wrong Jackson. The last two Jackson Holes were bearish. Okay? It was bearish. Okay? Can it happen again? If it does, we got to know what it looks like, guys. You can't just say, yeah, it's going to be bearish. Well, how do we know when to enter puts? Or how do we know to keep holding on to our puts if you're already in positions? Okay? This is how we'll know when the next support levels fail. What support levels do I have? I have 555 in the fib level at 553.4. Guys, listen to me. If these levels fail, the price action is screaming to us, we are going lower. Do you guys understand? 555 and 553.5 fails. Similar to how I use it on the 15-minute chart. If we see those levels break down using the 15-minute chart, more downside as possible. Especially 553.4. That's an important one. Why? Because it is a fib level. And if that fib level is lost, a lot more downside is possible. 552, 550, 548.5. Possibly all the way back down to 544 to 541 zone. Big possibility. But the bottom line is this breakdown of the trend line must hold to stay bearish. The gap is filled. Gaps get filled. There's no gaps to be filled now, guys. The gap is filled. The trend line is broken. Can Uncle Powell put the nail on the coffin? The question will be answered tomorrow at 10 a.m. Eastern time. If you already holding puts, I would cut loss above 561. Okay? If you're already puts, I would keep holding if 555 and 553.4 fails. If you're not already holding puts and you're looking for position, that is my trade idea. Okay? Take it with a grain of salt. Price action, baby. Now, that's the bear case scenario. Remember, we are sheep, so we have to talk about the bull case scenario and be ready. From here is around 556.68. All right? I have resistance at 557, 549, and 561. Above 561 would be a recapture of this trend line, and that would put 563 and all-time highs at 565 back in play. Bears, I know we're a bit excited. Y'all are a bit excited. I'm a sheep, but I'm excited. I'm praying for volatility, especially with Jackson Hole tomorrow. But we got to be unbiased about this, guys. Okay? Because anything can happen, and we don't want to get caught with our pants down. And if we be too biased, it's going to make it very hard when the price action goes against us to cut our loss. We got to be open-minded to any and all scenario. Okay? We break down 555 and 553.4. Bears fall through. Even if we gap below it. If we gap below it, then guess what? 552, 550, 548.5 are the next support. And if those levels fail, we are going down lower. And for all my RSI lovers, based on where the RSI is at, it's a lot more strength to head down. Okay? And of course, the bull case, we recapture lost levels. Tops are put in by false breakouts. Bottoms are put in by false breakdowns. Remember that principle, guys. All right? Let's move on to Triple Q. Also broke down its trend line. Bearish follow through for tomorrow would be also to break for 475 and 473.2. If those levels fail, don't argue with the price action. We are heading down lower, down to 470, 468.8. And I'll tell you this, we have a gap all the way down to 463, okay, to the body. Now, to the wick, it's 465. But if you judge it like me, to the body, then it's 463. Nice gap. And it could be possible if we break down 473.2, 472, 470, and so on, okay? Trust no bounce unless we recapture lost levels. That means we need to get back above 476.5, 478, 480.4, and 482. All right. Now that trend line is very steep. To recapture it, triple Q would need to get all the way back above 483, which is like over $8 away. Okay. Be open minded. Know the levels. Know the setups. And trade it unbiasedly tomorrow, because with Jay Powell speaking, anything could happen. And like I said, the last two Jackson holes were bearish. And it gets very dangerous when we start thinking this market is predictable, because when the market gets predictable, that pisses off the market makers. When we start thinking that, it pisses them off, and then they start flipping the script on us. We got to be ready. 473.2, if 472 fails tomorrow, we are bearish, heading down lower. But if we recapture those lost levels, 476.5, 478, and so on, we could get a bounce. Okay, maybe to retest the 480.4. That is a fib level. We'll see what happens. Tesla broke down the downtrend line as well. Looked like a liquidity grab, if you ask me. I am bear bias on Tesla as long as below 216. Okay, that's a fib level. And as far as the downtrend line go, that's around 212.5. I guess that'll be first resistant level. As long as below those levels, overall bearish on Tesla, and more downside is possible. 210 fails, guys, we could drop all the way back down to 208 and 203. Big possibility. All right, maybe most likely even lower. If this is truly a lower high, then we could definitely head down a lot lower. Okay, trust no bounce unless 212.5, 214.5, and 216 recapture, especially 216, because that's a fib level that was lost. We got a false breakout setup, guys. False breakout are bearish. So it's bearish. Unless we recapture 216, then it would invalidate the false breakout setup. NVDA also has a false breakout setup. It was chopping for like 3 days or so, but we had a big intraday move to the downside, broke back below the downtrend line. False breakout setup. The next support I have is at 123. If that level fails, 121.6, 120, 118.5, 117, and all the way back down to the next fib level at 115.7 in play. Trust no bounce unless this level recapture. What's that level, Uncle? 125.5. That would recapture the downtrend line. Break it back out, okay? And that could possibly happen, guys, if everybody start getting too bearish. Market makers gonna flip the script and hurt us. So as sheeps, we gotta be unbiased and open to the bull case and the bear case, okay? So the bull case recapture 125.5 and 127, 128.5, 130 plus would be back in play, okay? Definitely above 130, because look at that level. That's a fib level. Strong rejections there. That's a sell zone. So bulls definitely need to get above that level to really be bullish and put some type of bottom in, okay? Now I'm looking at the VIX. I haven't covered this in a while, but welcome back, VIX. Welcome back. I had a level here. You guys see the white line? You guys see the white line? The white line is based on a buy zone that I had back in late July. Recently broke it down and then recaptured it. So we got a false breakdown setup on the VIX right now, chat. Okay? That level is at 16. Is at 16, okay? So I'm going to give bulls the benefit, well, the VIX bulls, guys. I'm going to give the VIX bulls the benefit of the doubt as long as above 16, okay? More upside could be possible. Bullish follow-through would be to clear the next resistance at 18 and 19.5. That's the next resistance level that I have for VIX. 18 and 19.5, okay? And if we clear those levels, definitely more upside is possible, okay? Switch back to bearish on the VIX if we break back below 16, okay? It's good to watch the VIX. I haven't covered it in a while, but good to watch it. Sometimes, well, a lot of times, it does go opposite of the SPY. So breaking back down 16, making it bearish could help SPY bulls out, okay? So it's good to track it. I don't really trade it. Some of my members trade it. I don't really trade it, but I do track it. It's pretty nice. Now, let's get to the dog pool order. 560.93. 41% of activity came at 560.93, and it was a lot, 2.3 billion in premium. 36% came at 555.93. That was about 2 billion in premium. So that's around the area where the big money players are parking their money or using to move their money, guys. So definitely add those levels to your charts. Triple Q, 474.63. 40% of activity came there. Well, was there. What was the other one? 482.73, about 199.4 mil for 482.73. 237 4.3 mil from 474.83. Add those levels to your charts, chat. NVDA 123.74. 94% of activity was there. Add that to your chart as well. Giving it out for free like Kane. I paid for this. I paid for that. I give it for free. 210.66. I think I have a support around 210ish. Right around there. Add that level to your chart as well. Label it dark pool levels. Label it dark pool level. Break down with more downside possible. Is Tesla above it? It's a little bit above it. I don't know. Are they buying the dip or what? We'll know if it clears out those resistance levels I mentioned. Go to the Tesla section. All right. Might as well check the VIX while we're here. VIX? No, VIX has nothing, guys. VIX has nothing. All right. SPY. Filter for 100K premiums or above. Above the ask. Let me look out 3 months out. 3 months out. Bearish. Uh-oh. Let's take a look. Let's take a look. Some sweep orders. Okay, something's above the ask. August 23, 555 strike price. They probably made money already, but that's a split order. Oh, I'm looking at this one. That's a sweep order right here. That's above the ask. They probably made money. Bear's very happy. Okay, we got some calls coming in at the towards the end of the day, September 20th, September 27th. 557, 564, 565 strike price. Don't really... Meh. Let me see. Not really sticking out. Definitely see a lot of aggressive put buying. A lot of these puts are above the ask. So, okay, September 20th, 525 strike price, guys, above the ask. Aggressive bears. You guys see this? I think you guys like this. September 20th, guys. 525 strike price. They entered around 556.5-ish. Oh, that's a big bet. That's a big bet. Yeah, this person lost money. 559 strike price, August 23rd. I mean, if they bought it the same day, they lost money. Unless they held it before. But yeah, definitely seeing some good put buying from earlier above the ask. Most of the aggressive moves are definitely puts for sure. Triple Q says bullish. But look at this one. 466. Okay, August 23rd. All right, this is above that. This is a block order. This is a sweep order. August 27th, 472. 472. Yeah, it's a little out the money. Above the ask. That's bearish. That's a bearish play right there. Some calls for August 26th, 474. Not very out the money. Okay, this August 30th, 466. Above the ask, 466. Yeah, put definitely more aggressive put buying. These are a bunch of calls above the ask, but August 22nd. So they're not important to me. But yeah, it says bullish. But looking at it more closely, it seems more bearish to me. NVDA, bullish. But look, a lot more contracts for puts. More money went for calls, but more contracts with puts. Okay, let's see. Anything that sticks out. I'm trying to look at the ones that are above the ask. Yeah, but these are all a bunch of short date. Like, okay, this is above the ask. It's calls. September 6th, 123. 123. They may have tried to buy the dip, maybe. They bought the dip. We'll see what happens if that play out well for them. Yeah. Yeah, overall bullish, all right? Did I cover everything? Did I cover Tesla? Tesla's bullish as well. Okay. August 30th, 200 strike price. Above the ask. I don't see, like, it says, okay, so this is a call for 210. That's, did they buy the dip? They bought the dip. Where did they enter? They entered at 216. That's an August 23rd, though. They probably lost money. I think 216. They definitely lost money. Unless they held it from, like, they bought it earlier, then they didn't lose money. But if they bought it today, and they bought it today at 1220, what am I saying? They bought it today at 1220. Yeah, this person lost money. Yeah, they lost money. Good. Oh, they're probably not happy. Bears are happy. It's crazy to see these bets, these orders. And then you look at the price and it's like, wow, they must have lost a lot of money. Somebody's pissed. Yeah, I mean, the calls is like August 23rd, August 23rd, August 23rd. So even though it says bullish, it can be like misleading unless you really look at. Hey, look at this Tesla 180 strike price, October 18th. That's very in the money. They ended around 220.87. That's very in the money. Goodness. All right, this is put here September 22, 210. 210. They enter around 222.41. Wow, this person is up big. This person's up big. They got till September 20th. Anybody bought a contract similar to this? September 20th contract expiration date, 210 strike price. Wow, and they entered around 220.41. Tesla's at 211, and they got time. That's amazing. I'm happy. I'm happy to see that for people to win. But yeah. So yeah, that's my video for today. I hope you guys found value in the video. Remember, price action is the true shepherd. Peace.